Hey guys, Andrew from Stock Money. Hope you're doing well. So stuff has happened since the last post around a month ago. I thought it would be good to start off by having a look at this particular chart posted on the Stock Money X page. Basically compares April 2017 to June 2024, and it's printing a similar pattern. So this is the 2-day time period, so each candle is 2 days. So I said let's go and have a look at it on the 4-hour to see what's going on. On the right you're seeing 2024, which is now, and on the left you're seeing 2017 April. So in 2016, Bitcoin had its second halving, and that led to this blow off top at 1,100 euro. It then fell by about 37%, and then it started making its way up at around 80% from the low of 693. Around 80%. And then what happened was at 1,239 euro, it started to basically lose ground quite fast, and it corrected by about 32%. In the process, it made 1 low, 2 lows, 3 lows, 4 lows, every time printing a new low. However, it did come up to make a lower high, and the lower high, and the lower high. And then after this point in March of 2017 at 833 euro, it started to push back up, and then it consolidated at the top. So when it did this move, it started to print a broadening wedge pattern. Now, a broadening wedge pattern has at least 3 touches on the support and 3 touches on the resistance. So we have more or less 2 to 3 touches on either side. And then what happened was it spent around 8 days before it broke above it, and another 5 days before it started to meet its high of 1,241, and then it took off. So it does look quite similar. Why? Because we had back in January, end of January, a run up of 90%. Same thing, we got exhausted to the upside. We printed lower lows. We attempted to print higher highs, but we actually made a lower high and the lower high here. And this sort of confirmed the broadening wedge pattern. And now it seems like we're somewhere here. I think we're somewhere here. So our current support here is definitely 67,000 USD. I'm expecting we bounce from here on the 4-hour, and if we look at the RSI and on the 4-hour, we are in the oversold territory. So it looks like we should be getting a bounce in the next few hours, and if we do get a bounce within the next few hours, something like that, you get that W chart pattern, which tends to always push to the upside, which is good. Something like that. So this is possible. Having said that, if we do crack below, I would place an order at 64, and I would place an order at 58.59 USD just in case. This W pattern actually looks a lot, if it does play out, looks a lot like this one. I'll just go to this chart. It looks a lot like this one, where we did this like 1, 2, 3, and then over here we decided we wanted to go up. So if we look at here now, you could arguably say that there's a small tiny W format over there, so that's good. On top of that, we do have this cup and handle embedded within the broadening wedge. I'll zoom in. You know, it's pretty standout. I think it's a reliable pattern. This meant we broke out. It also meant now we're gonna find support at that level, which I think we're at the moment. So I'm expecting a move to the upside now. There's a good chance that there's gonna be a move to the upside now. And if we take, so here we said it took roughly 8 days, and then from those 8 days we had to go up 8%, and that took us another 8 days, and then once we did get above there it was 3 days. So we have about 8, 16, 17, 18, 19 days. So if I go here, we're already on 22 days, so it's taking longer. There's nothing we can do about that. But if it takes longer, it doesn't necessarily be a bad thing. I think it's quite fine. Might as well look at the fear and greed. We're at 74, and if we look at the net unrealized profit and loss, market sentiment, you can see that we are at the early stages of belief denial. I would say everyone is in that belief phase, and those that don't have are in the denial phase. So with regards to where Bitcoin will go, it's difficult to say at this point, because we can always then just hang around in this area, but we'll see. It's not totally obvious yet. But I mean, we are only 8 or 9% from the all-time high, so you know, it's looking good. I just want to mention a trading strategy that I had learned a while back, and it's a really good strategy, which I wish to see if anyone who watches these videos uses. Basically, the strategy involves just a way of looking at a chart and identifying bases. So this is a base and this is a base. Why? Because at this level the price went up 15%, which was significant. The price went up 10%, pretty significant. Price went up, yeah, pretty significant. So by the way, my Bitcoin update is done. Just for the sake of adding some depth to these videos, I want to talk about trading strategy. It's called the QFL Trading Strategy. It's very good trading strategy that you can use to identify areas of panic and areas of euphoria. Specifically here being an area of panic, and here possibly an area of euphoria. Okay, so if we look at this base over here, you can see that at this position you have buyers and sellers, and for some reason sellers, after price went up to 67,000, this is euro, after price went up to 67,000, the buyers ran out, sellers took over and pushed the price down to 56,000. At this level, sellers were beaten by the buyers, and the buyers ran the price up to more or less 66,000. And this exchange of buyers winning, sellers winning, buyers winning, sellers winning happens all the time. So we're looking at the 1 hour chart, and we're identifying simple bases. So this is a base, this is a base, this is a base, this is a base. Basically, you want the basis to be at least a pump of, really it's 20%, but for the sake of this video, I want to do it 10% here. 10%, 15%, 10%, 14%, and this is 16%. So let's assume as well a short base is this one, okay? It's 6%. Let's assume this is a base. The QFL strategy, which is called the quick fingers loop strategy, is when price tends to go below the previous base, price is panicking. So you have an exaggeration of emotion to the downside. So let's say the price continues going down, continues going down, continues going down. Eventually, you know, it's gonna, something like this is going to play out, and there's gonna be a bounce. So in anticipation of this move, you can refer to past bases. So you have this base and you have this base at this point. And what you do is you say, okay, when it goes below this price, I'm gonna buy in here, I'm gonna buy in here, and I'm gonna buy in here, and even I'm gonna buy in here, so that if the price panics and wicks down, you bought potentially, unless you didn't buy, but that doesn't matter because you bought on the way here. And then what normally happens is price will trend back up to the base. So it cracked the base, you bought, you sold. So let's look at this scenario. So this was a base which I had used. I haven't been trading that much, but to be honest, volatility is getting a lot more interesting, and I ended up buying the bottom here. I bought some over here. These are all nibbles, by the way, just for the fun of it. So if this is a base and this has gone up, and now you want to make a trade, if you make a trade here, okay, you're at the likelihood that you're gonna go down, you're gonna lose. If you make a trade here, if you buy here, within a few days you are down. So this is where patience plays a big part in the QFL strategy, because on this day was the 20th of March. 18 days later, the price was above. And 9 days later, the price was back at this base. So what I did was, okay, I'm watching the price. I'm gonna put some orders in because I know this is a worthwhile base. So I know that when price goes below the base, it will come back up to at least meet that base in a bear market or a bull market. And I can show you examples a bit later on. But essentially, I said, okay, when we were at 18th of April, and I saw that this was a significant lower high. First of all, if this was a base and you layered in here and you layered in and you layered in here, you had the opportunity to then sell at these levels. But in my case, what I did was I said, okay, I'm gonna buy here in line with this, and I'm gonna buy here in line with this. And basically price went down and this price triggered for me, and so I got the bottom, which was great. It was fun. I got back into it. Had we remained bearish, which I thought was likely, because we printed a lower high compared to this, compared to that, what happened then was we found support at these levels over here. Notice how important 56,000 in euro is for BTC, and now we're sort of quite far away from this level again, and there's discussion over whether the low is in, which I think it is in. Yes, I do. So if you draw this trend line all the way up, and now I know that this is a base for sure. This is a really tiny base. That's why, for the sake of the argument, I'm just creating one. And going back to our example, you have 1, you have 2, you have 3, you have 4, you're back again at 5, and then you're back again here at 6. This level corresponds with this level, and then that level corresponds even as low as here, 42,000. Like you get, these levels don't stop; they can continue going down because the panic is there, you know. I don't know if people are understanding, so I'll just go to any part of the chart you want to go to. If we go to 4 hours, so this is a swing of 18%, okay, and you're looking at the 4-hour chart. So you know that that's a base. Why? Because you had a massive pump. Then the price came back down here. So you're saying, okay, I am going to take a position here. So you have to imagine yourself in this situation. Okay, so the price is here. Okay, damn, what am I going to do? So the price can continue going up, which it can. But you don't really want to buy here. I mean, you can buy here because whatever you can, but you really want to maximize on finding risk to your advantage, and you do that by waiting and you being patient. So you say, okay, if the price goes to this level here because of this little tiny wick over here, which is 36,000, my order is in. I'm going to buy at 36,000, but I'm also going to buy in at this level here, which is 34,000. So I'm going to put, I don't know, X amount to buy Bitcoin for euro, X amount to buy Bitcoin for euro, and back of my mind, I always know that sort of these levels are attainable. These levels are attainable, and here is where you'll be buying very big. And these levels would have been reached had this not been a fake out, which was being a common occurrence in the chart patterns recently. So without looking, I mean, I knew the price went down, but without looking, my order triggered at 36,100. My order did not trigger at 34,800. So what? Doesn't matter, as long as we got a buy and we got this rally up. So this also became a base. So anything below a base you can buy, but you have to be a little bit aware, of what can happen. So let's say it's this is a base, which it is, and this is back in 2022, January 21. So here we had a 30% increase, 40% increase. So these are definitely worthwhile bases. And you're always tracking them. You have a higher high compared to this, higher high compared to that, a higher low, higher low, higher low. This is also a base. So what happens is, at this point, okay, sellers are in control, pushing the price down, and all of a sudden you get this panic, total panic station. So if you look to the left and you were preparing for this, if it's now the 5th of March, or I don't know what date this is, 3rd of March, whatever. We don't know where the price is going, but we're bearish definitely. Why? Because it's just not looking good. We're just more or less starting the bear market. So we say, okay, let's say I want to buy. I want to make a trade. I'm not going to buy at 34. I'm going to take a bite, let's say at 32, small, because this area is 6% lower, so maybe you want to be a little bit, because it's a bear market, you want to be a little bit more greedy, So you just start your buys here at 30,000. Why? Because you know that it will probably find support at prior base levels. And then you want to say, okay, let me look to the left. You have this base over here at 24. So I'm going to buy in again at 24,000. And then you continue looking left. And whatever, you can just start saying, okay, I'm going to buy here, I'm going to buy here, I'm going to buy here. And you know that this is a huge base. Okay, why? Because you had a massive 138%. This is a massive 68%. So anything below these levels, anything below this level is a buy. Anything below this level is definitely a buy. So, okay, we bought, in this hypothetical example, we bought here 1, we bought 2, and you have to understand that we're trading now, so we want to get out of the market because it's a bear market. So we want to get out at this level here, where this base is. So let's say between 30.5 and 31.3. So we bought this low, and so we bought this low, and I mean at 20% we should be taking profits because we're trading and we're in a bear market. So the second night we bought this, we had 4, 8, 12, 16, 20, 24, 28, 32. At 32 hours to basically secure this profit. But anyways, let's say we didn't, and we had another chance here to secure this because we're looking to exit at the prior base level. Okay, we're looking to exit here. In this case, we didn't find an opportunity. So this is why when it comes to risk management, we need to make sure that if we do enter a trade here and we don't, if we just we have to understand why we're trading. Are we trading just for short-term profit? Because if that's the case, it's fine. Or are we trading to just get in at the lowest prices so that we increase our hodl stack? In this case, it was fine because we bought at a price that wasn't seen for another month, another month. And if this was still open, we bought here at this level, and this one didn't go through. But later on down the line, we had a chance to exit. Why? Because this level went to our previous base level, area of entry. This is a really good way of entering and exiting. For now, I think I'm just going to leave it here because I'm not sure if people are interested to know more about this strategy. Can do maybe more videos if you're interested. It's what I like about this strategy is it's very understandable, and then if you couple it with chart patterns and technical indicators and stuff, it gets good. You can understand it more or less much deeper, on a much deeper level, and I mean, if you look in the past, you have these massive price swings. So let's say, I don't know where I am, it's 2017 December. I mean, this is the bull market, okay? So this is a base, that's definitely a base, that's a base, price go, this is a base. So at this point you're thinking, okay, I'm buying here, and I'm definitely buying here. You bought the bottom. This is keep in mind, this is a 25% price swing. This is a base. Another 23%. Why? Because with this strategy, what you should do is understand your trading. So if you bought here, you want to sell again at that level, just in case it doesn't continue going up. And you had the chance to sell. You had a chance to sell again, even off of this buy. You had a chance to sell here. There's loads of opportunities here that you could have bought, and you can keep doing this. And then you had this situation here. So this is not a base. Why? Because it's really small. But this is, and it still holds, and this is as well. This is as well. So okay, you go. This is 27% and even 50, as low as 55%. And this is trading the bear market of 2018. So you go, okay, I'm buying in at this level. I'm buying in at this level here. And I'm buying in at the low of this wick. Low of the wicks really wicks. So when something wicks down, price tends to go back and find at that wick. So I would have done it at this level here, and I would have done it here, and I would have got exactly the bottom when price went from 10 to 7. I went up 38% in just a few hours, and I would have bought in here at this level. Remember, that price eventually will always close prior basis. Why? Because the price is always going up. I'm gonna stop this video here today. I don't know what you guys think of it. I was unsure. Sometimes it gets a bit boring just to comment on what's happening with the price, because when everyone is talking about the same thing, it gets a bit boring. I think if there are people who are interested to know more about this, how, for example, at this current level, we have 56 and 52 of interest. We have 56.9, 56.9, 56.6, and 52.8. So here we're taking a very small amount. Here we're taking a slightly higher amount. Slightly higher amount. Here we can take a decent size. I mean, we might not get here, but there are instances where you just get a panic, and those are the ones where you can really make money. Look at this. I mean, this went up and down recently by 14%, you know, in March. So there are always instances where you can potentially take advantage of this. So right now, 56.6k trade is nice. 58.3k trade is also quite good. 53.9 trade is also good. And then anything below this is just all in. Why? Because definitely because of Bitcoin's fundamentals, but because you know that, let's say price does something like that, you know, it's gonna do something like this, and then it's gonna be up, and it's gonna be quick profits, you know, very quick profits to make. So anyways, if you're interested, please let me know, and definitely I'll get a bit more structure on how to talk about this trading strategy. Basically, if you want to learn more, it's Quick Fingers Luke. He's the mastermind behind this trading strategy, where basically all you're doing is pinpointing areas where buyers and sellers are having arguments, and when sellers or when buyers panic too much, price always restores. Okay. This is also a very good level, 48k. If you get in at 48k, you're gonna make a very quick profit. You know, something like this, and goes up. You know, like that. That was quick. Yeah. Cool, guys. So for today, I'm gonna end this video. I hope you enjoyed it. I'm experimenting a little bit, and let me know what you think. Ciao, ciao.